we move further from our uh, move on from yesterday's class. So we were talking about Fibonacci. So Fibonacci, we need to know this Fibonacci very well, very well. Okay, that's how you brought your sister. That is good. So we, yeah, just now. So this Fibonacci, please. Okay, you know how to use Fibonacci. Okay, so now, thank God there's light now, and we can be able to comprehensively know these things very well. Mhm. Okay, all right now. Yes. Oh, so you're not supposed to use this. You're supposed to. Oh, okay. I think it's an indicator. So it's fine. All right. Now we talked about Fibonacci retracement too yesterday, and I was explaining that Fibonacci retracement is a what? Is a vertical line. Is that not so? That is being divided what? With diverse ratios. Those ratios act as what? Support or resistance. Support or resistance levels. Do you understand now? That if it breaks it, it becomes a what? If it breaks it to the downside, it becomes a what? Resistance. If it breaks it to the upside, it becomes a what? Support. So, uh, where is it? This one. This one here. Now, this is the given ratios. We have 23.6. We have 38.2. You need to know these things off air though. 61.8, 76.4. Now, this Fibonacci tool can be used in an uptrend and in a what? Downtrend. If you are to use it in uptrend, you are using it. Okay, now this is it. Let us create a new page. Am I correct? Yeah. Now, if you are to use the Fibonacci retracement in an uptrend, you are to use it on the what? On the low and high of the impulsive movement. So what is the impulsive movement here? This guy, this guy, this guy. Are you following? This line here is the what? Impulsive movement. This is the retracement. This other one here is the impulsive movement. This is the retracement. This guy here is the what? Impulsive movement. This is the retracement. So for you to use your Fibonacci retracement tool on an uptrend, it has to be from the low of the impulsive to the high of that impulsive. The low of the impulsive to the high of the impulsive, to know at which point the retracement we get to at the given ratios, which I said the average what percentage at which a retracement should get to is within the what 50% to 61.8% ratio. You have to know this. It is very important. We have to what? Know this. So you are expecting that this retracement gets to what? 50% to 61.8% of this impulsive movement. To now know at which point the next impulsive movement will start from. So using it on an uptrend, it is from what? From your low to the high of an impulsive movement. Now, don't forget, I said that this overall market structure you are seeing can also be an impulsive movement in a particular time frame. So, in such a way that if this market structure in such a way that if this market structure changes. Now, yesterday I was saying that there are additions to these things, there are exceptions to these things. Now, I'm talking about the addition of this guy now, Fibonacci retracement tool. Now, in such a way that you have a market structure going what? Upward, and it has changed structure. And I told you that the ideal movement of a market structure is that if it's not going upward, it comes what? Downward. Now that structure has changed, how were we able to know that this structure has changed? Because we have a what? A new lower what? Low. Going lower than this guy. Are you seeing it now? So you are now expected to know that this particular movement is acting as a retracement for this entire movement. Are you following, guys? So what will you now do? For you to know at which point this retracement is going to end, you can now use your Fibonacci retracement to take it from the low. Where is the low? To the high. Where is the high? Looking at what? Those percentage ratios to know where this retracement will get to. And we are expecting that it gets to 50 to what? God bless you. Are you following, please? Hmm? Yes. So when the I still don't get. Mhm. Yes. Mm-hmm. And the structure change like this. Mhm. Yes. As it, for the whole, God bless you, man. Yes. So how were you able to know that there's a retracement going on? Because this particular movement has closed below this guy. Do you get it now? From what I taught you guys on market structure. So you take your retracement tool from the low to the high to now know the what? The ratio at which this market will what? Fall on for the next what? Impulsive movement to start. That is another structure, uptrend structure to now start. So if this market coming down did not respect those ratios, that is, it will continue what? Going down till it close below this guy, and the entire structure has changed to a what? Downtrend. Are you following now? Before it until it closes below this guy, then the structure has not changed. It is still possible for it to go up. So when I go to Elliott wave theory, you will understand these things much more better. Because Elliott wave theory will tell you that the market moves in waves. And when markets move in waves, there are some number you need to look at for. That is, in a particular structure, the wave must move in impulsive 3 times. One, that is 1, 3, and 5. Then once you have an impulsive of 1, 3, and 5, you are expecting a what? A change of structure. There's a pure there, you can take it. Don't worry, when you get to Elliott wave theory, you understand much more better. It's a way to calculate the wave at which the market structure moves. So when we get there, you will understand. Yes, you understand much more better. So are we following, please? Now, if we go to the real-time analysis, now we can see this. Now, you've drawn your zone, you've drawn your minor zone, major zone, and you are able to identify. Look at this. Look at this. Yes. You are able to identify that this market starts all the way from this place. Is that not so? And it's moving all the way what? All the way up to this point. Are we following, guys? Now, up to this point. So you can be able to know the movement of this guy using your retracement tool. Now, let's say you now know your retracement tool, you now want to use it to practice. Now, let's imagine that this is what is happening as the current price. So, market came all the way down to your zone, boom. Do you see that now? When it came down to this zone, what candlestick pattern do you have? A bullish engulfing bar. Do you see that? A bullish engulfing bar. Can we see the red candle and the green candle? That is a what? Bullish engulfing bar on 4-hour time frame on the major zone. What does that tell you? It tells you that people all over the world are staking to buy at this zone. So, and what happened from here? Market starts going all the way up, boom, 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 boom. When it got to your minor zone, do you see this red candle? Now, when the red candle form, what are you supposed to do? Take your what? Fibonacci retracement from the lowest part. Where is the lowest part? To the place at which that retracement starts from. Now, do you see that now? Now, this retracement gets to where? Inside the 50% to 61.8% before it now continues what? Going up. Now, from that point, you can see a bullish engulfing bar. And it broke above the previous high to the what? To now form a new high at this point. But at least we've taken profit here. We've taken profit at minus 0.27. Do you still remember the minus 0.27? Are you following, everyone? Now that you have this and you have this, what will you do? You cannot take your what? Your trend line, boom, from this guy to this guy and straight into the future. Are we following, please? So are we getting it? Straight into the future. Now, you were able to know that markets will start buying from here using your Fib retracement tool. It got to 50 to 61.8 of your what? Entire impulsive movement. Now, from this place, another impulsive movement starts. and it got to this place, boom. So when it got here, you can now see market did what? Market starts retracing, but look at the retracement. The retracement broke below the what? The trend line. Now that it has broken out. So we call this what? A breakout. Whenever you see a breakout, a valid breakout from a what? From a set trend line, you've set this trend line to guide this uptrend movement. But whenever you see a breakout, it tells you that a structure is about to change from this trend to another trend. So it can be from this particular trend to another what? Bigger trend, or it can be from this particular trend to a what? To a downtrend. Just know that this particular trend that is going is about to what? End. Any question? Is it?
From the future, that is why you measure it like this. You don't know that it will come back.
You say? You say? This guy. Now, don't forget exactly what he said. We don't know what is happening in the future. Always remember that. It's because you've already seen all this. I wish I'm subscribed to this replay stuff. I would have been able to. It will not work. It's 4 hours. It will not work. So now this is what we are seeing. Boom. This is what we are seeing. Markets will sold all the way down to this zone. Boom. And from this zone, we hope you are seeing this end part. Now see this. Wow. A beautiful what? Bullish engulfing bar at this zone, my major zone. It is a buy. Then what now happened? Boom. Let's say you took this buy up to this point and you saw a red candle, you exit. So you are waiting for a retracement to happen. But how will you get to know the point of that retracement? Your Fibonacci. Boom. That's how I do it though. From this guy to the upside. Boom. And it retraced to 50%. Okay. When it retraced to 50% to this guy, don't worry, and don't forget, I'm checking my what lower time frame for execution. So if I change it to lower time frame now, everything will change. But you get it now, and it starts going all the way up. Boom, 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 boom. Okay, got to my minus 0.27, I take profit again. Then I'm fine. Then since I now have this starting point and my first rejection, what will I do? You need to guide that trend. You need to guide the trend to the future in case there's going to be a what? A breakout. Do you get now? Or a change of that character, a change of this uptrend character. So what will you do? You take your trend line and you guide it, or your channel, whatever the case could be. Boom. And you connect it with the second one and straight into the future. Now this market continues, boom, but changed behavior at this point and came all the way down, broke out from this trend line. 4-hour breakout is strong. 4-hour breakout is what? Is strong. Now it broke out, boom. Once it breaks out, then you will now take your what? Fibonacci retracement. To now know the entire retracement from what I explained here. Don't forget the entire, because there is a, it's just as if you are taking what? To guide this uptrend. Do you see that now? You guide it, it's still respecting the element, but a breakout happened, boom, wow. So now that a breakout has happened, what will you do? You take your Fibonacci from this lowest point to the highest point to know where this retracement will what? Get to. at your given ratio. Now let's go back to this. Is that not the same thing that happened here? Boom, boom, breakout. So what will you do? Take your Fibonacci from the lowest point to the highest point to now know where the retracement will get to. But what average price are we looking at? Now see what market did. Boom. It came down to within the ratio of 50 and 61.8 and give us a pattern. What pattern is this? My God. So what does that imply? It implies that this market is still what's going up. Do you get it now? Now, you enter a buyer. Once you enter a buyer, where will be your take profit? Zero. Then where will be your second profit? Minus the, now you can see that the line of that minus 0.27 is God bless you. Do you now see that analysis is respecting? Do you now see? Are you following, guys? It works like magic, but when you understand it very well, it becomes simple. Are we getting it? Now, this minus 0.27, you can see that it falls at a what? At a zone. And I said market moves from what? From zone to zone. Are you getting it now? Boom. Then it starts. Now, can we now see from here, from this point, market now start another what? Another trend to the upside. So, what can you now do? For you to guide this movement, uh, where's the list? So, for you to guide this entire movement, you will connect this part to this what? To this retracement of this impulsive movement and straight into the future. Are you following, guys? From this point to this point and straight into the future. Straight into the future. Exactly. Because this is an impulsive retracement. Now another impulsive movement is happening, which we took already from here. Do you remember? Boom. So when, don't forget, I told you that this is the trend. Is that not so? Are we following? We've captured the whole movement of this trend and this trend, and we've connected it with the trend line to the upside. Let me take it off. Let me use channel. Where's my channel? Yes. Hmm? No. And then where will this one be? Is that not so? Mhm. Ooh. I'm coming in. All right. All right. Now, everybody look at the screen. Do we still remember this? The impulsive retracement. We saw a W pattern at the retracement of this impulsive movement, and we took a buy here, and it went all the way up to the next zone here. Now, and I told you that if you see this movement, this is also a what? A market structure to the upside. Are you seeing it now? Higher high, higher low, higher high, higher low, higher high, higher low, higher high. So for you to guide this trend, what will you do? You take a trend line. Are you seeing that now? Don't forget, we took a buy here and we are out at this place at minus 0.27. So market starts retracing. Boom, boom, boom. Expecting that market will come down to this trend line for us to get a what? A bullish signal to buy. But what happened? Eh? A broke, then that is a breakout. So what will you now do when there's a breakout? What will you do for you to know the retracement of this impulsive movement? God bless you. From the what? From this point to the highest point. Okay, to the highest point. Now, can you now see the retracement? Boom, boom, boom. From this breakout, it came down to where? It came down to 50% and what? 61.8% fib level. Do you see that now? Mm-hmm. So what pattern can you see here? Do you see this? Market came down to this place, then a what? A green candle. See this? Then can you see this? One, two, three, three white soldiers. Are you seeing it now? This this red candle, this one, or this one. Now see this retracement. This retracement came down to 50 to 61.8. A red candle first, then a green candle. See the green candle. So this green candle, what candlestick pattern is that? A bullish pin bar. Then, but yes, that is a pin bar. No, it's not engulfing. No. So, but you are expecting that the buying momentum will close above the what? Above the price of this sell candle for you to know that market will go all the way up. And this candle closed above the what? The body of this candle. Do you now? We now have one, two, three white soldiers. And what happened? Market respect this what? This retracement to this retracement ratio and went to what? Zero, which we have a what? A zone here. So this will be your what? Take profit area. Do you now see? Market did not break it to go to what? Minus 0.27, and it was what? Boom, boom, and it came all the way down back into the what? Now, now let's continue. Hmm? This body, closed above the body of this red candle. So if this body, or if this buying momentum that is happening did not close above this candle, then there's every tendency that this market continues to go down. Are you seeing it now? See the red candle. Now the red candle is still in between our 50% and 61.8% ratio. Then what now happen? You now have a green, boom. Now this green is a what? Is a bullish pin bar. Which is,
I didn't mean the green close below this red candle. Bring it down.
if this green close below it, it won't be a green color, then it will be a red color. Do you get it now? So then what now happen afterwards? You have a green candle, another green candle. You can see that the close price of this green candle, you see that line is above this body of this candle, which tells you that the buying momentum still continues. Then you now have a chart pattern here: green, 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 three white soldiers. And what happened? Market moved all the way up to the what? To our first TP point, which is 0. And our second TP point is supposed to be minus what? 0.27. But market did not get there because of there is a zone there. Do you now see why you need to have your zones and all that? You said? This guy, right? But at least you've taken profit when, because market has got into your zone. Because this is a lot of pips from here to that place. This 4-hour time frame is a whole lot of pips. With 0.01 on this trade, you can make up to $20 to $30. Yeah, 0.01, $20 to $30. Now let's continue. Now you can now see that, boom, from here. Look at this. Look at this. Market from here respect and went all the way up. Higher high, higher. Don't forget, this is a breakout to know where the what retracement we get to, and this is the next impulsive movement. Is that not so? Are we following? This is the next impulsive movement because market starts from this retracement of this guy. So once this is done, it has finished its work. This one too has finished its work. Now we are looking at this place. Now we've taken profit from here because it has gotten to our 0, and market starts what? Retracing from this zone. Now this retracement is happening now. You can now take your Fibonacci to from this guy to this guy to know where this retracement will what? Get to. Now do you see this retracement? Where did it get to? And what happened? Market start buying to what? 0 and almost getting to your minus 0.27. So are we following, please? You want to say something? Is that? Do you see this? Boom. And from year to year is all bullish. So, so you are coming down to a lower time frame. Yes. So there will be a candlestick pattern there at a lower time frame that will tell you that market is about to buy. Now, are we following, please? Mm-hmm. Now, it's respected. What will you do? Boom. You delete this. It has done its work. You take a trend line from this point to the second point and straight into the future. Now, can you see this? It's breakouts. Hmm? Down, like this point. From this point. Do you know? Okay, it came down here. It's okay. Then it's, yeah, exactly. To this point. This point, yes. Mm-hmm. Exactly. because it came down to 50%, it went up, it still came down to that 50%, acting as a retracement of this impulsive before it now what goes all the way up. Are you following, please? Now, do you now see this breakout? Boom. When this breakout happen, what are you supposed to do? Take your Fibonacci from this guy to the entire what high point to know where this retracement will get to, for you to enter the what, for you to enter the next buy at your retracement. Are you following, please? Now, when it happened, boom, 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 market came. Now, do you see? Market came all the way down to this point. Did it get to 50% retracement? It gave a was a bullish signal. What candlestick pattern is this? Engulfing. But what happened next? Market still came down. So now at this point, if you should take advantage of this, your stop loss will be here, and it will take you out in loss. Are we good with that now? It will take you out in loss. Just respectfully accept the loss. Manipulation. It's not every time you win the market. It happens at times. That is why you need to make use of what? Your stop loss. Because you've been making profits here, you've been making profits, you've been making profits, you've been making profits. Just this one that will take you out of loss should not. Yes, yes. You can wait for the next confirmation, but for you, for those of us that don't want to wait for the next confirmation, you can enter with a small lot size and put your stop loss. Don't forget, I said how I do enter my trade is that once I get a candlestick pattern, boom, I enter. If I'm to enter with 0.05 as my lot size, I enter with what 0.01 or 0.02. Then when I get a confirmation in the next candle, then I will now enter the next lot size. So if I enter lot size, if I enter, no, if I should enter with zero, if my entire lot size is 0.05, I will first enter with what 0.02 or 0.01, since I've gotten a pattern here, and this has validated that this guy is going to respect this movement, because it has broken out from this entire trend. Then you now add the remaining lot size. So my entire lot size is 0.05. You enter with 0.02. So once you get the confirmation that it's going to still buy further, you enter the remaining one. But now with this, it shows the market to know what buy further, and it came all the way down. All right. It's not possible. Then don't trade. If you don't want to lose at all, then don't. Then trading is not for you. So that you cannot. So it could be possible for a period of time that you are winning consistently, but a day will come that you will lose. But make sure that you don't allow the loss compromise your capital. You've been making profit. Now, say how we were following this guy. We were making profit from here to here. Let's say you make $20. It's retraced. You wait patiently. You enter from here to here, another $20. That is 40. You wait patiently from here to here. You enter. You make another $20. It's retraced from here. Boom, boom. From here, you enter another one. You make $20. That is why you need to be consistent with what you are using. You understand? Now, from this point, you now enter a trade, and your stop loss should be below the liquidity of that formation. Now, once it takes you out at this point, will it take you out with how much? Will it take you out with $20? No. To take you out with $5 or $10, out of all the money you've made, you are still winning. That is how traders think. Oh. Of course. So that's why we have what they call risk to reward ratio. Risk to reward. When you get to risk management, you understand all these things effectively. Now, do you now see A 4-hour breakout, boom. I think this is as a result of news. This is news effect. It happened, boom, breakout. Now it has broken out from this what? Entire channel, this entire trend. What will you now do? Who can tell me? What will you now do? We don't know what is happening in the future. What we see is a what? Is a breakout. Boom. Now what you God bless you. From where to where? Are you following now? This is the entire trend of this guy. But the breakout happened, boom, from this entire trend. So what will you do? Your Fibonacci. From where to where? So who can show me the low? Who can show me the high? Of course. Where is the low? Yes. Where is the high? Touch it. Yes, you are correct. This is the high. Yes. Because this movement here is responsible for the breakout. This is the entire, we are still in an uptrend. Now it has broken out. Don't forget, on an higher time frame, this is an entire, let's go to daily time frame. Now look at the daily time frame. This is the breakout that happened. Look at the daily time frame. What will you call this? Higher high, higher low. The next higher high, higher high, higher low, higher high. We are supposed to have higher low, but you have what? Lower low, because it has broken out from this what? Uptrend. Now what will you now do? You want to know where this retracement will get to. Is that not so? For the next impulsive movement to start. Are you following now? Now, let me use my, I can use this guy here. Great. Now, do you see this now? This is what we have on our what? On our daily time frame. Market got to this place, and we know that it's from 4 hours now. You still remember on 4 hours? Boom, higher high, higher low, higher high, higher low. We expect the next what? Higher high. Then let's see what happens. Red candle. It's respecting this zone. Do you see it now? Breakout. When the breakout happen, what happened? This entire trend has been compromised. So you want to know where this market will get to, huh? For you to now start looking for another opportunity. So what will you now do? You take your Fibonacci from the what? From the lowest point to the highest point, which we did on what? On 4-hour time frame. Do you still remember? This is daily time frame. Now, this retracement got to what? 38.2. And this 50% retracement is telling us that this line, this level is on our what? On our minor zone. You can see this minor zone. So that is, there is a foresight that this market will come down to this point and respect. Don't forget, you've been able to create your minor, major, minor zones throughout, and you are now seeing the market of the movement respecting the zones with your Fibonacci application. Are you not seeing it now? Now this market respect this, and it is coming down to the next zone. Where is the next zone? This minor zone. And we have our 50% retracement at this minor zone. Now let's see what the next candle will be. Now, red candle on our 50% retracement. If this red candle continues, boom, 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 and it closes below this guy, then I know that it's coming to where? At where? At this point. Do you get it now? Now let's continue. Let's see what the next candle will be. Boom. Do you see now? It respected this 50% retracement of this entire what? Entire trend. Let's come down to 4 hour time frame. Yeah, I heard. So I need to subscribe to use that. Uh, so it won't work for you. It won't. This replay I did, it won't work for it. Yeah. So should we still continue with this daily time? Or no? Okay, let's go. Let's go back to 4 hour time frame. So let me take this off. How will I take this off? Now 4 hour time frame. Exactly. Now this was what we saw on daily time frame. This from this point. Don't forget daily time frame has how many 4 hour candles? Eight. Do you see that now? Eight. Eight times four, 24. Abi? Ah, six times four. So six. Do you get it now? So that is on 1 hour time frame, you have how many? 24 candles. Do you see that now? So you are expecting that on 4 hour candle, six candles form to give you a what? A daily candle. Are you following? Now this red candle came down to this 50%, and you can see there's a gap from here to here, telling you that there's a bullish engulfing bar of this red candle. So a bullish engulfing bar at this point, what will that tell you? Market is going up. So what will you now do at this point? You adjust your trend line to this next one and draw it straight into the future. Are you following, please? Now, let's go back to EIS. That is how you follow the trend of a market. That is how you follow the trend of a market. Okay. All right. Uh-huh. Now, guys, look at this. Now, we imagine we were able to pick that this market we after this retracement from this point to this point. Do you see where it got to? Boom. And market start buying all the way up from here. It got to our first TP point. It got to our second TP point. Is that not so? And even went beyond it to the what? To the next zone. Don't forget, market moves from zone to zone. It got to this zone. Boom. It broke out from this zone. It got to this next zone at our what? Minus 0.27. Then it broke out from this zone to the next zone. Look at this market. What pattern can you see here? What chart pattern can you see here? W pattern. Can you see the W pattern? Do you see that? Where's the neckline of this W? This major zone. Is that not so? Then it came down back and boom, all the way up. Now let's see from this point to this point from the breakout. Did market get there? Thousands of pips to the future. After this breakout. And how were we able to know it? Because we were able to guide the movement of this trend. Are we following, guys? So that is how you do it. That is how you follow the structure or you follow the movement of the market using the Fibonacci tool. Are you seeing it now? Now, I told you that your structure that you create or the structure that you create can either break out from the downside or to the upside. Now, do you see this structure you've created? This channel you've created for this uptrend? It broke out, 4-hour broke out what? Above it. So what does that tell you? It tells you that a particular trend is responsible for this breakout. Where is the trend? Where is this particular trend? This one? No. What trend is which of this particular trend is responsible for the breakout? Where is the starting point? Who can yes, where is the starting point of this breakout of this trend? No. Come, wait, no. Come and show me. No, no, no. God bless you. This is the starting point. Don't forget, I said market moves in trend. And when a particular trend is formed, just know that another trend is what is emerging inside another trend. So the trend could be responsible for the breakout either to the upside or to the downside.
But it's not a different trend. It's the same trend, same uptrend. That's why
So that's what I'm telling you. You can get another trend from a trend. Now this is an uptrend, but this particular uptrend is already compromised because we have another new uptrend.
okay, this one
So a trend can always be up or down from any trend. So this entire trend is uptrend, but there's a breakout from this on trend with another what uptrend, which the starting point is at this point. So now that this breakout has happened, What will you now do? You guide the movement of this trend. Higher high, higher low, higher high, abi starting point, higher high, higher low, higher high, higher low, higher high, higher. It continues like that. What will you now do? You take your trend line, you connect this from the lowest point to the second point and draw it straight into the future. And draw it straight into the future. Straight into the future. Straight into the future. Do you see it now? You connected this and you draw it straight into the future. Do you notice that as market touched it, boom. Now it came down again, boom, it respected it till it got to a zone of an interest. That now what broke it out, boom. Now do you see the breakout? Now once you do this particular trend here has been what compromised. What will you do? Just take it out. Don't confuse yourself. Of course now. If you should enter with one lot size here or 0 points, no, with one lot size it cannot. Or probably if you use 100 lot size, one lot size from here to this point should be giving you up to like, okay, long. So you took the trade here up to this point, and your stop loss is under the liquidity. 543 pips. This is the amount. $54. Wait, I don't know. But how many pips is it? 543.9 pips. Yes. Yes, this is 543.9. So if you use 0.01, 0.01 for these pips will be $50. 0.1. 0.1 will be what? $500. Yes. Then 0.1 lot will now be $5,000. Yes. $5,000 is more than, is close to 10 million. Yeah. Come and sit down anywhere, please. Uh-huh. Now, are we following? Now, do you see the breakout from here? Boom, the breakout happened here. The breakout from this trend, it happened here. Do you see the breakout from this guy? Don't forget, I said that once a particular trend, yes, once a particular trend breaks out from another trend, what will you do? Take out the previous trend and follow the current trend, so that your chart will not be what, too busy. Do you get it now? Now you have this to this. Market broke up, boom, to this side. Now when the breakout happened, you are trying to look out for the what? The entire retracement of this what? Impulsive movement. So what will you now do? Your Fibonacci. Now to take this off. So from this point, where is this? from this lowest point to the highest point. Now, okay. Are you following, guys? Now, do you now see after the breakout happened? Normally, we are expecting that this market does what? Come to come to 50 to 61.8. You can see that this 50 is at what? Is at our minor zone. Now, can you now see this market retraced all the way down to what? 38.2. It's still 38.2. Don't forget I said market can be close to your zone or somewhere around it. In as much you get a candlestick pattern that is valid, you can count it as a what? As a valid zone or as a valid level. Now you can see, boom, it came down to 38.2. So that is, it broke 23.6, but came down to 38.2. You know why I left my 38.2? Because listen to this. At times, not most of the times, market can come down to your what? To your 38.2 and respect and start going all the way up. That is why I had to what? Leave my what? 38.2 as a what? As a valid level also. Are you following, please? I could have removed it that I'm just looking at 50 and 61.8, but I added it because it has happened to me most of the times that I will be waiting for market to get here, and yet market has respected it and it's already going. Are you following? Okay, you were not in the first class. Boom. Where is it? Were you in class when I was explaining all this? So don't worry, you will listen to the video for you to understand much more better. Yes. So anyway, you see 0.336 is 23.6%. Anyway, you see 0.382, it is 38.2%. Are you following, please? Is there news today? Today is Tuesday. Okay, we have news by 3. Abi? Job opening. USD. So whenever I come to Forest Factory to check on news, I check on USD and AUR. USD and AUR because that is the currency I'm dealing with. Yeah. So if you are trading AUD USD, there are news for AUD too. Do you get it now? The one you are trading. The one you are trading. I know. So if you are trading AUD USD, you are looking at AUD and USD. If you are trading NZD USD, you are looking out for NZD. Is there NZD? Yes. NZD is here, but it's not a strong impact news. Yellow folder means what? Low impact. Yellow folder means what? Orange folder means what? Mid impact. Red shows that high impact, strong impact news. Do you get it now? So are we getting it, please? Are you following? Now, market got to 38.2, respected. That is, this zone is still respecting. Are you following now? And what candlestick pattern can we get at that zone? God bless you. Yeah, you are catching up. You are catching up. Great. So morning star. So is this a standard morning star or strong or weak? God bless you. Then what happened? Market started going all the way up towards zero, our first take profit point at this what yellow zone, and minus 0.27 at our what second our major zone, which is, do you see that it is respecting? Are we following, guys? Then what will now happen here? Look at this. From the beginning, don't forget we removed this particular trend. Is that not so? Boom. Now, you can now see that there's much confluence to tell you that this market will buy from here. Don't forget, our Fibonacci retracement from here to this point, it retraced all the way down to retest this what? This breakout. Breakout, retest, distribution. Are you following? Are we seeing it? Market move all the this point, breakout, came down to this trend line to retest it at what? At our 38.2 fib level of this guy. So that is how many confluence now? 2 to 3 confluence. Then the fourth confluence is that we have our what? Candlestick pattern, morning star, and distribution all to the upside. This is our first TP point. Boom. Probably there's a reaction here. Then it goes up to the what? To the next point, which is minus 0.27, and we are out of this trade from this point to this point. But when you practice often and often, yeah, enough, you'll be able to spot it. Ease, with ease. Now that this particular trend has been compromised, we will delete this. Let me delete this. Now this particular trend has broken out, Abby. Boom. What will you do? Take it off. This one too has been compromised by this. You take this one off. And don't forget, market move from here, boom, to this point. So you are connecting your new trend from this guy to this guy and straight into the future. Are you following? From this point to this retracement point. Yes, your trend line, and straight into the future. To monitor the movement of this what? Of this trend. You touched it. Let me take this off. First point, second point, and straight into the future. Okay, we are talking about this. Let's say this. But what happened here? Fake out, and it entered back. What will you do? You adjust. Because there is no what? There is no valid candlestick pattern that shows you that there is a breakout. So you adjust it, and the market continues to what? Go up. Now it came down to it. Break. Do you see the breakout? Boom. Now that it has broken out from this entire trend, what will you do? Now there's a breakout from this entire trend. So what are we going to know? Now that this breakout has happened, we want to know the retracement of this entire. So, God bless you. Fibonacci from where to the highest point. Now it retraces down to where? To this zone at our what? 38.2 fib level. Did it respect? Don't forget, this is your major zone. So, and your third confirmation is that you got a candlestick pattern. What candlestick pattern is this? Morning star. Standard. Oh, okay. Standard or standard or strong? Eh? It's standard. She's correct. It's standard. Red candle. This candlestick is above 50% of this red candle. Above 50% of this red candle. So this is a what? Standard. Now, do you see that now? Boom. And it starts going all the way up. So where will be your new trend? From this guy. This one has been compromised, so you delete it. Then you connect from this point to this point and straight into the future. Are we following? Now, the reason why I do this channel is because I'm already seeing another trend inside. Are we following? Okay. When it breaks out. Now, this particular trend is ongoing. Now, do you see? It is still respecting. But I'm expecting a retracement of this now. So we are still in overall uptrend. Is that not so? But don't forget, I said within a trend, another trend is happening. That is why I drew this. That is why I drew this trend. Do you see it now? Now, if I should take my Fibonacci, don't forget I said you can use your Fibonacci on any what time frame. If I take my Fibonacci from this point, notice was what we this was the end of that retracement you saw, and another trend continues to what emerge from there. So that is why I do this trend, boom, boom, and straight into the future, which I still have my overall what uptrend at the downside. But because I don't want my chart to be full with a whole lot, don't let it to be. You don't need to let your chart very busy. So make sure it is simple enough for you to read. There's a retracement has happened, boom, another trend is emerging. So just draw your trend line on the current what on the current price. So this is the current price, this is the what current trend happening. So straight into the future. And if you should trade this with our Fibonacci, eh? Because this is the end of the retracement of that long bar, and another what impulsive movement is happening. So if you put it from here to this point, you cannot put it here. Why? Because there is no breakout from this trend.
Like I want to capture where that thing is placed to front corner. Another impulse is fine. Do you get?
Okay, then it will then you want to know where this retracement will happen. Then you will need to be from this low to this high. Exactly. But I just want to show you that this guy is also respecting from this low to this high. Do you get it now? 50 from this point to this point. Maybe this is 38.2 or 50. Then if you should draw this one, it's broke out from this point to this point. Now from this point to this point. What's that? Okay, this big. Now, from this point to this point, you see, market came down to what? It was, first of all, bearish. Boom. Boom. Okay, this is the lowest point. You have to make sure that, and this is the highest point, yes. Now, market came all the way down to this point. Boom. Now, when it came down here, what happened? This is a bearish Maribozu. So it did not respect your 50. It did not respect your 61.8. But it came down to what? So this your trend line, and this your what minus zone, respected it and bounced it back. So at the end of the day, you have what? 3 inside up. Is this a strong or standard 3 inside up? Standard. Do you see it now? Red, green candle, and the next green candle. This is 3 inside up. This is the red candle now. So the first what green candle at your what at your support channel, and at the what minus zone, and the next one making 3 inside up. This 3 candle, red, green, green, 3 inside up. But this is not a strong 3 inside up bullish. It's the same color. This is green. This is the second green. It's the same color now. Yes, now, like, the red is telling us that market is coming from a downtrend. This market is coming from a downtrend, and this is the last trade of this downtrend. So for us to know that there's going to be a reversal, a green candle must emanate to now close above this guy to tell you that market wants to start going up. But we now have a chart pattern here that is what 3 inside up, but it is not a strong, it is just standard because this second green is above the what 50% of this entire red. Do you get it now? So it is still giving us a bullish signal. And what happened? Market was all the way up from there. So you have a whole lot of confluences around this place to tell you that markets will buy. Market is currently on the what? Minus zone 1. Number 2, it is at the what? Support channel. Then the third one, market retraced down to what? Between the price of 50 to 61.8. Because when it came down, it still entered back into that what? Into that zone. Do you now see the confluences? And market what? Went all the way up. Did it get to, now see this? Did it get to 0? It got there. Now, it is currently retracing from this point. Is that not so? And we are still expecting that when this retracement finish, this market is still coming to where? 1.1, 1.15 at minus 0.27. But I called a sell here. Why did I call a sell here? Because this trend line that should guide this what? This buy movement has broken. God bless you. It has what? Broken out. Yeah, exactly. Yes. It has broken out. So what will you now do? Take your Fibonacci from the beginning of that to the end. Now I'm expecting that this retracement comes down to either 38.2, where we have our first TP point, at this point, where we have our second TP point, and 1.13, our third TP. Now, exactly, this was also the confirmation of why I had to call the sell, because there's what? An evening star here, or bearish engulfing bar, responsible for the breakout of this what? Of this trend. Are you following, guys? Now, that is it. So where will your take profits be? At point of what? At the point of interest. So where is your point of interest? I'm expecting that this market come down to the 50% of this channel. Do you see it now? 1.13690. But probably it could come all the way down to 38.2 before it now goes, because market can do that. It does that a lot. It will break it, boom, and go back. Yes, you can put your TP at 1.1338. Yes, 1.138. I think that is even the point of the first TP for the sell signal I gave. See the prices here. You can see the prices now. 1.138. This is it. So, expecting that this market sell to this mitigation block to mitigate with this guy, and any reaction that happens, it could sell down further or it will buy up. But at least it has gotten to CP1. Do you get it now? But I'm still expecting, because of this entire breakout from this what? From this trend, I'm expecting that this market sell all the way down to this average price. Don't forget, any breakout that happen or any retracements, you are expecting that that market gets to what? 50% to 61.8 retracement level. Are we following, guys? So that is it. So boom, 1.1335. 1.1335. I'm expecting this sell to come down to 1.1335, and we enter from what? 1.141, and second limit is at what? 1.145, and market is currently profitable. Is that not so? Please, are we following, guys? Do we understand this? Yes, I entered it. No, it's been a while now. So, so that is how Fibonacci works. Do we have any question? You need to practice. Yes, we need to do classwork. Hey, hey. Now, We are going to do something now as classwork before the second section. We are going to do something now. And one of the reasons I even called sell here because market is close to my what? Exactly. It's close to my resistance. Exactly. That is why I called it. And if and the reason one of the reasons again is because if you should check this, what chart pattern can you see here? No? God bless you. Head and shoulder. But is this shoulder higher than this head? Mm-mm. Is it higher than the head? Uh-huh. Have you seen some people shoulder like this? Exactly. Uh-huh. So that is how it is. Your shoulder is not compulsory the shoulder. Some people they form guy now. See, like this now, it's a form guy, and it's become part of them. So that is it. In as much the shoulder is not higher than the head, so this is head and shoulder pattern. Where is the neckline? Eh? Okay. God bless. Now see the closing price. No, see the closing price. Look at the closing price now. Head, shoulder, the second shoulder. This one. Anyone. But this is head and shoulder pattern. And you have what? The neckline where? Yes. Has the neckline broken? Yes. Mm. So that is it. On 1 hour, you have head and shoulder pattern. On 4 hour, you have what? Evening star. So I'm expecting that this market sells. That is all these things that happen above this guy. I'm seeing it as a what? Fake out. All right. So do we have any question? Now we are going to do this now. We are going to do this. Plus. Let me add a new currency. US USD. Give me any major currency here. USD. Let's use GBP. Oh, there's even USD GBP. Wow. Yes, USD GBP. It's not part of the major currency pair I give to you. What I give you is GBP USD. Now that is whatever is happening in USD GBP is the opposite here. Now let's add it. Let's now add GBP USD. Now Nigeria there's USD NGN. USD NGN. Yes. USD. Now you see the logo now, US. Now, see how it looks like. You cannot read it. But let's change it to line. But if you change it to line graph, but the line too. So you cannot. Yes, dollar is now around this price, but black market is around 1.6.
I think that ice, that ice, that ice, thing we saw behind.
Eh,
I think that's what is
showing. Yes, yes.
you know that USD.
GBP USD. We've drawn zone on this. Let me remove it. Remove. Now, let's do the practical now. Now you are on a particular chart, boom, and you want to start analyzing that chart. What are you expected to do first? No, you are supposed to what? Draw your zone, your support and resistance. No, you have to draw your zone first. Do you get it now? You draw your zone first. Is that not so? Then how will you, for you to draw your major zone, what time frame will you go to? So you go to what? Weekly time frame to draw your what? Now, whenever you see your trading view like this, just press Alt R. So when you press Alt R, it will give you a what? A fitting screen. Alt R. Okay, if you double click to it, let's check it. If you see your market like this and you double click too, do you get it now? Great. Now you are on weekly time frame and you want to get your major zone. So how will you get your major zone? What was the explanation I gave? From the current price, God bless you. Then left. Then you start looking out for what? Rejected areas. So where are the rejected areas here? Can you show me? Rejected areas. From the okay, it's okay, it's fine. Can you show me? Just one, no? One, wait, one. It's okay. Uh, that is another reject. Can you show me rejected area? It's okay. Can you come and show me rejected area? I show you should like. All right, I love you guys. Yes. Aha, God bless you. Come and show me a rejected area. Mm. Mm. Okay. Just show me a reject. Is she correct? All right, sir. A rejected area. Aha. Yes. Next person. A rejected area. Oh, it still remain. No. Eh, come and show me rejected. You've not been coming to class actually. Mm. All right. Okay. All right. So where rejected area. And you are correct, oh. Exactly. Yes. Okay, you were in the first class when we talk about it. All right. Yes, sir. Come and show me a rejected area. And somebody have. Aha. It's okay. It's okay. So we all know it, right? We all know it. Now let's continue. Now that you've known your rejected area, what will you do? You take a what? A box. What so? Rectangle. And what? Start placing your zone at those rejected areas. From the what? Now, this is the starting point. If you look left, this is the first one I'm seeing. Is that not so? From the closing price to the week, and you draw it straight into the future, or draw it what's left, making sure that it connects with another what? Rejected area. So it connects with this, it connects with this, it connected with this, it connected with what? This. Don't forget, what we are after is what? Future price. uh, Setting coordinate, yes, 15,000. Are we following? Boom, straight into the future. Now that this is connecting with this, I will make sure that it covers it very well. Exactly. Yes. Now is to draw it straight into the future. Now, once you get this, boom, you are expected to get the what? The next one closer to it. This is the first one you've gotten. So you want to get the next one closer to it. So who can show me the rejection area that is closer to this guy? Wait. Yes, sir. Yes. Mm. Come and show me a rejection area that is closer to this guy. Yeah, no. Yes. Mhm. Show me, yeah. Show me a rejected area closer to this guy. Where is it? That is close to it. Is it correct? Yes, he is correct. He is correct. This guy is correct. Because if the one actually what I'm looking at is this one. But he said this one. Is it connecting? Yes. So he is not very correct. Oh, no. You are coming to your weekly to get all your zones first. So once you get it, you will now come down to a lower time frame. That is 4 hours to now get your minor zones in between those zones you've gotten. Now, if you now the next rejection that is closer to this, he said this, right? Now, what are we going to do? We will clone this. Even trading view automatically agreed with it. Do you see? Are you guys following now? So, if you now come to your lower time frame, this particular one we are seeing here will be your what? Your minor zone in between these what? Two major zones. Do you not get it now? Now, trading view sweet oh. Automatically, he helped me that yes, this place you've identified as is correct. Now, you were asking a question that how do you what? A rejected area. But you've been in this class for like how many days? Now, now it's fine, Sha. Now let me say this again. For you to know your rejected area, you are looking at points at which there is a U-like shape. That is a U-turn point. A point at which there is a reversal on your major zone. So those points at which there is a what, there is a reversal, is a point of interest to show you that that particular point is your what, is a zone. So now they've been everybody has been pointing out those U-turn like points, like this point now, like this point. Uh, where is where is my paint? Paint. Do you see now? Follow. Boom. Do you see that U-turn? This point. Boom. Do you see that U point? See this point? Boom. You see that turning point? See this point here? You see this turning point? See this turning point here? You see this turning point? See another turning point here? You see this turning point? There are a whole lot of turning points. See this turning point? Yeah. Line, no, there's no need for line graph. There's no need for line graph. Are you seeing those turning points? Now, now, it can be at the top or below. Oh yeah, come and show me. Come and show me a turning point here. Exactly. Wait. Oh. Now, come and show me a turning point here. God bless you. So this turning point is telling you that there's a what? There is a zone. There's a rejection at this point. There's a zone at this point. But we are after the what, current price. That is, if you continue to draw this all the way up, it will definitely touch, align with this one that you've identified as your what, zone. So you don't need to disturb yourself coming towards prehistorical data to get your zone. Just come to your what, your current price, because what we're after is what, futuristic price, and get the zones, rejected areas around that what, current price, to what, to derive your zones from those points everybody has what, has derived. Did you get it now? All right, sir. Now, this is our current price. Now we are getting our what, our zones. Now that this has been derived, now what is now the rule I gave you? The rule I gave you, that now that you've been able to identify a first point and a second point, now it is now subjective to you as a trader to now start deriving the next zones using the what, the calculation of the length from here to here. So that is, the next zone above and below must be this what, this length. Are you following? So now that we've derived this and we are to get the next zone at the upper part, where is our next rejection area that will give us the same height of this guy? So somebody should come and show me. Can you come and show me? Where will be the next rejected area that will give us the same length of this guy to this guy? From this zone to this zone. Where will be our next zone? Wait. Let, so, is it correct? God bless you. Is that what you wanted to point at? Is that what you want to point? Let me show. Oh, yeah, come and show us. Okay, no, no, no. Come and show me. It's good. It's okay. It's okay. Where is it? Mhm. This one here. No, this is not a turning point. This one here. Okay, this one here. Uh-huh. Now you see that this one will connect with this guy. That's it. So now, what are we going to do? And let's clone it. Then we should not get the clone. Trading view. Help us to what? Take it to the next. But yes, it is not the same length. What will you now do? You adjust it. Don't forget, you are expecting that it moves from zone to zone and it has to be the calculated height. Of course, it must. Then this one in between will be your what? God bless you when you come to your lower time frame. It, it's plenty. Now, if you draw your minus zone from here, if you draw your minus zone from here, it will connect with this, 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 straight into the future. I mean, straight into the future. Yes. Are you following? What you are getting first now is your what? Your major zone. Trading view was very correct though, but you will adjust it because you are after the what? The length of this what? Of this guy to the offside. Yes. Now what will you now do? Clone it again and take it to the next one. Somebody should come and do it. Ah! EU is falling. My God. Oh yeah, somebody should. Don't worry. It's for us to come to that level too. So very soon. You will right click. No. Right click. Yes. Clone. Ah, trading view too sweet. Adjust it a little bit up, up. No, still go up. Exactly. Do you know why I said up? Because the closing price of this guy, this this guy, and this particular one here, so this one here, do you see it now? So whenever you are connecting it, you are looking at the space in conjunction with what? With other prices. Perfect. Congratulations. Eh? That is why. That is why. Eh. Trading view is very sweet. Now, for us to get the next one, what are we going to do? Once you clone it, it will take you to the next one. Then what will I do? I will adjust it. Do you see it now? It touched this, it touched this, it touched this, and straight into the future. Now, you will clone it more to the offside. Is that not so? Yes. Once you clone it, because if this zone should break, it's coming to the next zone. Exactly. it touched this, it touched this, it touched this straight into the future. Now, are we seeing this now, guys? Exactly. Now we have our what? Major zone. This is how you get your major zones. They are not big. They are okay. You are going to smaller time frame for execution, not for analysis. So if you now you want to derive your what? So what time frame will you come? Now, before you come to that, before you come down to your to 4 hours to get your minor zone, you come down to what daily time frame to see if what you've done is aligning, and probably there is need for what adjustment. Now, do you see it from here? Market respected, came down to this point, respected, came down to this point, broke, went to this next point, came down to this. My even from the year now, you will be seeing your minor zones. Came to this point, broke it. Do you see? It break it. When it break it, it retested, went to the next zone, respecting. Are you seeing it? I can now adjust this a little bit to touch the what? The tip of this guy. Boom. Do you see it now? Now this one broke out, went to our what? Minor zone, then to this point. So this one is a fake breakout. Then went all the way up, break the minor zone, and went to the next zone. So I'm expecting that if this zone break, it's going to the what? Next zone here. I want to believe, I want to believe, no, we are taking it step by step. I want to believe all of us know how to derive our zone now, please. It is very important. If you don't know how to derive your zone, please raise up your hand. You know what will give you clearance? What will give you clearance is you watching those videos. You have to watch those videos, please. Hmm? Because if I keep repeating, I will keep repeating again and again. But watch that video. Once you watch that video, anything you don't understand, send me a message on WhatsApp. So yes, we will do. No, I'm saying derive your derive like this video. We are doing screen record right now. Yes, all our videos we have screen record for it. Where actually can we access? Where actually can we access the video? Yes, so we will create a group. Don't worry, I will talk with Mr. AY. We will create a group and we will send those videos there. And if you want, yes, if you want it personally, you can meet with. Eh, we will create the WhatsApp better so that you won't disturb him. I will, once we create, once we create the group, once we create the group, once we create the group, we will send it into that group for more. If you want to advance or to compare it with this teaching here, to now have more profound, you understand, training, it's fine. Hmm? All right. So are we getting this? Now we can see that on our daily time frame, everything is what aligning. So you are coming down to your 4 hour time frame to get your what minor zone. So for you to get, do you not see? Do you not see that it's not too big? Who asked that question that will you not? Do you see it now? It's okay. It is. Don't forget, you are coming to 15 minutes, 30 minutes for execution. So you are not using this for your analysis. Uh-huh. Now 4 hour time frame, you are now coming to check. Now what is the instruction I gave you to get your minor zones? What was the instruction I gave? God bless you. 50%. That is, you are looking out for reactions, rejected areas in between two major zones for your minor zones to what perfectly fit or align in. Now, so now we have our first zone, we have our second zone. So where are the rejected areas within these two zones? Hello, sir. Help me to call him. Now, what did I say concerning getting a minor zone? I can remember you were in this class because you've not missed any class. Ah, no, no, fine. How did I? Okay, I said if you are to derive your major zone, what time frame? To derive your major. Okay, to derive your to derive your major zone. What time frame? A week and what? 4 hours. So to now derive your minor zone, it will now be what time frame? Ah, Lord of Jesus. You are mixing it up. I said to derive your major zone, you use weekly time frame and daily time frame. You set it on weekly time frame and you use your daily time frame to check out the what if it's aligning. Then you use your 4 hours and 1 hour to derive your what minor zone. Now we are now on 4 hours. Now we are looking out for rejections in between two major zones. So where are the rejected areas here? Okay, so after the break, should we continue? Okay, we will come after the break. Alright. We will come. Abi? Okay, I wanted to try. Don't worry. When we come back. Yes.